vocabulary words. Well done. So here's another question with this. If the majority of people, Sacks, just put your legal hat on for a second. If the majority of people who bought a token in a project, we'll call it the Acme crypto project, they buy Acme coins. If they're buying them and they have absolutely no interest in using them for the utility, and they say, I bought these as a speculative device, and the founder says they're utility tokens, but let's say 70% of the people who bought them said, I didn't buy them for that reason. They just came out and said, I bought this to speculate on the price. What should the government do? Should they deem them a security or should they deem them a utility token?
I think that's a complicated question, but I think that there should be an opportunity for these cryptocurrencies to establish themselves as utility tokens because they do serve a purpose. They are designed to be part of a system, right? They're not just objects of speculation. And by the way, even if they were, we don't treat baseball cards as sort of as security. So it wouldn't necessarily make them a security just because they're speculated on. They actually do serve a function in a designed computer system. So I think what's important here is that there's a safe harbor where these crypto companies know what the rules are. And if they can basically meet the criteria, such as by paying corporate income tax when they sell the tokens and other things like that, that they won't later be deemed to be engaged in an unlawful sale of securities. I think the important thing is just that entrepreneurs, founders know what the rules are so they can abide by them and not be surprised.
They don't right now. Yeah.
Well, so they don't get surprised later. They don't get whammied, but with basically, because they are building something legitimate here,
Right. But it would seem to the sniff test if the people buying the tokens have no idea, have never written a line of code, have no use for them.
I don't see why that's relevant. Well,
because they're profiting off of them as if they're shares. And unlike baseball cards, which you can't sell 1,000 baseball cards for an increasingly, in a very instead way, you would have to put them in an auction.
You kind of can.
There'd be a lot of friction. You
could sell physical coins.
Friedberg, what do you think? If the majority of people buying a token are doing it to speculate, can the founder say it's a utility token? And then those people who are trading it like either baseball cards, minted coins, whatever analogy shares you want to use, are in it for the increase in the value. Should it be a security and should they have to play by the rules we play at in the traditional venture startup game?
I mean, the question is, what's the utility? So, I mean, if you can demonstrate some utility, then maybe that's the and this will probably be litigated at some point, right? I'm sure there'll be enough capital sloshing around here that someone will say, you know what, we believe strong. I mean, we're seeing this happen with Ripple already, but someone will litigate this and we'll get some clearer definition on, what statutes are going to be referenced and what those statutes might say with respect to how this ties to the definition of utility, and then that'll become hopefully a standard that people can kind of look to guide them in the future. But it's definitely the Wild West right now. And everyone's going to try.
The reason I bring it up is because Gensler was sort of floating this argument. Chamath, what do you think?
I think that you can't wipe $3 trillion of value out of the world. And
okay.
So
pragmatically hard to do. Got it.
So it's here to stay. And it's too institutionalized now. So there's just way too many organized pools of capital that are now speculating inside of this entire ecosystem. I saw a tweet today. There's a firm, I think called Jump Trading or something. It's like a high-speed frequency trading organization. And they tweeted out some pictures where, they hired a bunch of folks to start a Jump and they did a coding boot camp on Solana. That was their onboarding as an example. So when you have people in high finance really vested in this thing, and you have $3 trillion of value that'll go to 6 trillion and then go to 10 trillion. This can't go away. So that's why I think Powell and Gensler had to say some version of that on the record, which is, we're not going to ban this stuff because they know it's not possible. So I think David's right. You have to create some rules, make folks and let folks pay their taxes. I remember, for example, I did this Bitcoin transaction in 2014 or something. I bought some land. I used BitPay. I transferred some Bitcoin, bought the land, blah, blah, blah. It was whatever. But then
whatever.
I left. I mean, I owned a lot at the time, so it wasn't that big of a deal. But my point is, finding a way for me to pay my taxes was a huge deal, I remember. And, we filed the tax return and we tried to make sure that we paid our taxes. These are very complicated. Even if you want to be conformant to the government, it's impossible right now. So they just need to create some rules where folks can say, here's what I own, here's what it's worth, tell me how much I owe you. And we're all willing to pay, or not, maybe I am. Because I just think it's like, make sure that we can trade around it, hedge it, structure it, do the things that we would normally do with any other risk assets. Right now, that's very hard. And when you own lots of this stuff, it sits in your balance sheet and you just take these enormous swings and you're just like, God, you can't do anything around this stuff. And that's not a viable financial market. That doesn't.
Yeah. To be specific about what Gensler said, I just looked it up here. He compared utility tokens with, laundromat tokens or tickets to the opera. And he said entrepreneurs are choosing to perceive their tokens as utility to sidestep regulation. And that, here's the quote, they are highly speculative investment tokens for people who are trying to save or speculate for their future. And that's why I think it's appropriate to bring them inside the investor protection perimeter. I agree with him. I also agree with you, Chamath, that this is a can of worms that I don't know how you put the genie back in the bottle.
No, but he's partially right. I mean, he is partially right on some tokens, but he's not completely accurate on some other tokens. I think it's on a case-by-case basis, and it depends.
Listen, I think anybody who is buying these tokens right now knows that they're engaged in financial speculation. This idea that people in middle America are going to blow their retirement savings on crypto, I just don't really buy it.
But if they know, if they're doing speculation, then it should be a security.
No, David, I think you're totally wrong. I totally buy it. Look at the quarterly returns, the filings of earnings from companies like Robinhood and Square, and how much money they make from crypto, and look at their audience. That's totally not true.
But don't you think that audience skews really young and they're getting their COVID stimulus check and they're YOLOing it into meme stocks or crypto?
What does that have to do with?
Well, because you're making it sound like they're going to blow their retirement savings. Okay, well, if you're talking about a 25-year-old who's got $5,000 of retirement savings, maybe, but they still got, they still got 40 years of work ahead of them.
Hold on a second. Wait, no, they don't. This is going to be the least hardworking generation of our lifetime. Why? No. Not because they're not hardworking. Why? There's $70 trillion that boomers have that they are about to pass down to these folks, on average between 2 and 3 trillion a year for the next 30 years.
Also, they know how to do gig work. Like, they're so smart, this generation. They know how to do projects for $5,000 and float themselves.
You're going to take one entire turn of the world's GDP and give it to 100 million people in America over the next 20 to 30 years. That is what is actually going to happen. So,
yeah. Look, I think
of course they're going to keep YOLOing this stuff.
Yeah, look, I think we're getting off on a little bit of a tangent here. My point is not that there shouldn't be investor protections, but rather that I think we also need to balance another important objective, which is to create a hospitable environment for innovation. And the fact of the matter is that you've got a lot of brilliant young entrepreneurs, computer scientists building this financial infrastructure of the future with crypto. It's not just speculation. There is a lot of code being written. It has functionality. There's a purpose to it. We don't necessarily want to interfere with that to the point where we break it.
Every startup has to do their securities, though, David. All the other startups that are not in crypto are playing by the rules. So it's crypto people get a pass. It's unfair.
I agree with Jake. People make this claim, and I just think it's so specious. Do you think that you would have made a single professional decision in your life based on tax rate? Have you ever made a single, I'm going to start this company, I'm going to make this product, I'm going to change this job? I just think that most people...
I'm not talking about paying taxes. I think it was smart for example, Solana to pay corporate taxes on their token sale. I think everyone should pay their taxes. That's not what we're talking about here. And I'm not saying that Gensler shouldn't prescribe regulations. I think that part of the purpose of those regulations should be to give entrepreneurs predictability, to be able to give them a safe harbor so they can build what they want to build.
Let me make one final point. I'm just saying from my perspective, I just think that if you have clear, sensible taxation, that's 90% of what this industry needs. And I don't think it will change anybody's real motivation to work inside this ecosystem.
I agree.
Just like entrepreneurship doesn't change when capital gains rates.
Look, I've paid taxes at on all my crypto sales like it was any other investment since the beginning.
That's not the issue. The issue is when you're a company and you're raising money, should you be allowed to not follow securities law because you say it's a token? Friedberg, when you look at this, an NFT company came out this past week that was selling shadow shares in startups, and anyone in the world could buy a shadow share in a private company like Stripe, et cetera, in this fantasy football league. They wound up shutting it down or changing it because they didn't want to trade on other people's intellectual property. They were concerned about that. But just looking at it, the public in America, 96% of them who are not accredited, cannot buy shares of Stripe in the secondary market, but you can buy NFTs in it and speculate on the NFTs, which are accelerating from $1,000 to $500,000 in these different clubs. How is it fair that crypto companies get to not obey basic securities laws? Friedberg.
Well, it's not a security. There's no underlying asset.
Okay.
It's a collectible. An NFT is clearly a collectible, J-Cal.
Okay. And
I don't have any legal ownership
10,000 of them
over
and have a marketplace for people to sell them and they're appreciating. I mean, I do agree it's something different.
Sounds like art to me.
Yeah, you could go draw a picture of Stripe and put it on a piece of paper and go down to downtown wherever and stand in front of the burrito shop and try and sell it to people. It's
qualitatively different than a security, but they're acting as securities in relation to the fundraising of these projects. So I think that's the challenge.
Not everything is a security.
Yeah, there's no secured interest. You don't have any secured interest. It's literally just like an image, a figure.
I was just offered a Giacometti sculpture, but I turned it down.
How much? 60 million?
I'm not going to comment on the price. Yeah. I had to say no.
Was Stephen Cohen selling it?
I'm not commenting on the seller.
I bet Stephen Cohen was selling it. That was the record deal. Stephen Cohen bought that Giacometti sculpture a few years ago. It was like the highest price ever paid at auction for a piece of art in the US.
Can I just tell you my problem with it? I took the price and I divided it by the height in centimeters and it just tilted me.
Is price per square inch a metric?
It is in my head. It was in my head. In 2015, Stephen Cohen paid $141 million for the Giacometti sculpture, L'Homme au Doigt. Pretty incredible, and I think you're right. It's about 12 inches tall or something. That's a lot.
I just want to let you know that sculpture looks like it was done by a 12-year-old.
Oh my God! Stop.
Oh, J-Cal, you're
stop.
Yeah,
this is the billionaire equivalent of crypto and NFTs, right?
Totally. Totally.
I don't know what scam this guy's running, but that looks like
I don't know how anyone can raise their hand and say, I have an independent, objective assessment of the value of anything in the world. And you can look at it from high to low, and this is all effectively a subjective business.
The sculpture looks like it was a beautiful sculpture that was in a giant fire and that somebody pulled out of the ashes.
It's a beautiful piece. If you want to read a little bit of art history, you can understand a little bit about Giacometti's work, but it's a 70-inch piece, not 12 inches. Sorry. And his work is all about kind of like how do you capture the essence of the form. Anyway, this is a super ridiculous tangent.
Looks like somebody made something out of mud and put it into a clay oven.
I have a very funny Stevie Cohen story. So this was like 10 years ago at Art Basel in Miami. And the day before the art fair opens, it's called the Vernissage.
For rich people.
And so, it's like a day where you can go and see the stuff the day in advance and you can, kind of buy stuff or whatever. And it's very funny. It's kind of like, like when Walmart does like a Black Friday thing, like everybody lines up and then they open the doors and we all run in. And I was standing side by side. We were right at the front of the line. And I noticed that he had these, and this was my first time there, and he had New Balance running shoes on. And I thought, what is he doing? But then when the doors went open, they just took off and started running. And I was walking wearing normal loafers. And then I realized I should have been wearing running shoes.
You don't own normal loafers. You were wearing Italian loafers.
I missed out on
the balloon dog guy.
It's like the running of the bulls.
I missed out on it. Was the running of the bulls. So I missed out on everything.
Running of the billionaires.
I got to the things after and I was like, oh, sorry, I sold it to Stevie Cohen. I sold it to Stevie Cohen. Everything I got.
Jesus Christ.
I had blisters on my feet. It was brutal.
Do you guys know we haven't even started our agenda?
No. Episode 50 off to a great start.
Episode 50 is a train wreck.
Fucking moderating this. 3, 2. All right, Facebook whistleblowing hearings occurred, yada, yada.
Hey, everybody, welcome to the All In Podcast.
Jesus Christ.
Welcome to the All In Podcast. Let's start our show.